Welcome to the Galen Trombley Show. Be sure to subscribe, review, and share the episode. You can follow me on social media at Galen Trombley. I hope you enjoy the show.
Greetings. Please hold for a very important message. Light speed sequence initiated. How may I help you?
Bonjour.
Security breach.
The truth shall set you free. Awesome. It's a miracle.
Stabilize. 3, 2, 1. Mission complete.
Thank you. Have a nice day.
Welcome, everybody. This is episode 218 of the Galen Trombley Show. Apologies a little bit. I'm getting over a little bit of a sickness, so my voice is actually, this is the best it sounded all day. So we're getting there. We're sipping tea. My guest today, I'm really excited for this. As people know, I like to read, and one of the books I read last year was a book called Profit First, which I was introduced by a lot of different people in different realms, like personally, and then just, you know, whether I saw it online or read someone referencing it in another book. So usually once I get enough recommendations for a certain book, that's usually a good sign to buy it. So I ended up getting it. Read the book, absolutely loved the book. It deals a lot with cash flow and kind of a different way of looking at, I'd say, accounting kind of stuff for businesses. So I really like it. And the guy that wrote the book, I've read a couple of his other books, and he's a very practical gentleman and really has some good ideas. And I think kind of a little bit of, I wouldn't say a little, this is a big paradigm shift for a lot of people, I think, if they read this. But with that being said, I ended up seeing this on LinkedIn, and someone that we met through North Country Connections at the Chamber, and I think you more virtually on LinkedIn, but you're very active there. And I saw one day you posted this, and then I ended up thinking, well, that would be good. And then I saw that you were recently on, did an event with Lynn at Lake City Co-working, and I was like, you know what, she'd be perfect because I love the book, and I found out that you were actually a certified Profit First professional strategist. And you're also the owner of Financial Tally. So my guest today is Lori Mercaldi. And Lori, welcome.
Thank you.
Yeah.
I finally get to meet you face to face. I mean, we've seen like two ships passing in the wind.
Yeah. I mean, we've seen in person, like we've been in the same room, but yes, like actually to sit down and like have a conversation. I'm looking forward to it because like I said, I like this, and you always seem like a nice person. And, like I said, just our paths haven't officially crossed, but here we are. And, I guess for people that don't know you, who are you? What do you do? And
so I am a profit strategist. My background is in accounting and tax. I started 35 years ago. Actually, yesterday, February 1st, was my 35th year in business. When I say it like that, that really, the age kind of kicks in, and I realize, wow, I've been doing this for a long time. And I started out with an accounting and tax practice. And the reason I did that was I had two young kids at home. And I think my daughter, Rachel, was almost 3, and my son, Mario, was almost 1. And I had decided that I was going to work outside the home. And I went to work for a local company. And I realized the first week I brought home, after paying daycare, about $50. And I said, wow, there's got to be a better way to do this than go out of the house. So I decided to start a business. I eventually moved into financial planning. I was a financial planner for a number of years too. And then I got into, I kept seeing the same things every year with my business owners. They get to the end of the year, they wouldn't have the money set aside for their taxes. They wouldn't pay themselves all year, and they couldn't understand where the cash was going. And I knew this was an issue, so I started looking for a cash flow management system, and I came across Profit First. And I read the book, and I said, you know what, I'm going to try implementing it in my business first and see how that goes. And that's what I did. So I implemented it, and I said, wow, this really makes sense. There's a lot of clarity now around how the cash comes into your business and how it goes out. The next thing I did, I said, I want to meet this guy. And I just realized that, he's in New Jersey, which is a 6-hour car ride. So I went down to New Jersey, and they have what's called convocations. So when you first become certified in Profit First, you do some training, and I met Mike down there, and he is the real deal. And that's why I started to get into it a little more. I've met other people that are involved in it. I think there's around 600 certified Profit First professionals worldwide. And I just thought it was an awesome way to manage your cash flow in your business. And it's been great since I started it.
And what year was this roughly?
So I think it was around 2017, 2018 I started. He actually started Profit First. I think it was 2014 or 2015. So I got in pretty early on.
Yeah.
So they were, at that time, they were just implementing it with they use accountants, bookkeepers, and coaches. So not everybody has an accounting background. Some are just coaches. And I needed to implement something that was more than just maintaining somebody's books or doing their tax return. That's compliance. It's something that has to be done, but this really helps you grow and helps somebody move forward in their business. They have a destination. What do you want? How do you want this business to work, and what do you want it to provide for you? So I just thought that this was a much better way to clarify how cash goes in and out of their business.
Yeah, and the reason, and like I read this book, and I'm not the one of the things I would say, I kind of always am like analyzing my own self day to day. I think is probably most people are in their own head doing that, and one of the things I find I'm not very good at is we always hear like keeping money accountable and doing that, and I find I'm just not good at that. I find my internal banking system is I just feel like, okay, I have more money coming in or I have less money coming in, and I just kind of make adjustments on that. And it's certainly not a good, I say it's probably not as loose as what I just made it sound, but it feels like that in my head. So it's probably more strict than that, but I feel I'm a very like anal person in a lot of things in life. Like I'm very organized and attention to detail, and I find that I'm not that way with money. And this was like a glimpse into it when I'm like, that system speaks to me like that. Like I understand it. I don't implement it like the way that this is done, but I can see from like where I am to where it goes. Like that is a really good path to get you on the straight and narrow as
right.
like, okay, hold your money accountable, know where everything goes, know what your spending percentages and how you can grow and how, you kind of, and one of the things, we'll dive into is the idea of, limiting expenses until you can start expanding on the expenses, almost like when you earn the right to expand on the expenses.
Right.
But in the meantime, become more efficient. And I think that the reason that this spoke volumes is because the last couple of years in our business, real estate was off the charts, like not in a good way.
Right.
I say I rode the wave really well. I positioned myself really well for those 2 years. But at the same token, we knew it was not going to last. It was It was a bubble. You knew it was going to pop. And what happened was we did this a little bit, but you could definitely see this around that people started to get almost like lazy with their money because they had extra. And they're like, whatever, I'm not going to be as strict, or I'm not going to check double check things as much.
Yeah.
And I think this book really shows like, okay, become more efficient and don't let that creep in. And this is really a good checks and balance, I think, to really hedge against bull and bear markets for your business.
It does, because it forces you to really delegate each dollar. Each dollar has a job. So, and the way that it's set up, there are five core accounts. There's an income account that all the income goes into that one account. So you can see the flow. It only goes one direction. Then you have your profit account, your owner's pay, your tax, and then your operating expenses are last. And because you prioritize paying yourself first and withholding money for taxes, that's another big thing. That forces you to be really efficient with the operating expenses, whatever you have for cash. And normally when I work with clients, we're looking at least at a minimum quarterly, we're going through the expenses again, because as you go along, I don't know if you did this, or did you look at your expenses when you first started it at all?
With this book?
Yeah.
I did actually. I pulled out, and I was kind of off air, because that's what I was asking you. I'm like, did I look at it right?
Right.
These numbers, so I did do it the right way.
Yeah.
So yes, if I was to look at this, I would say that my expenses, like, and I'm just going to go off of like the book of what they say is like, so say you have a $0 to $250,000 real revenue, you should have 30% expenses. If you go 250 to 500, 40%, 50 to a million, 50%. So like, we started to go into those ranges. We were higher than the operating expenses, which based on everything I read in the book and have seen, I think that's like
it's
the common.
typical. That's
like
where you start because you don't know what you're spending until you really sit down and compare it to what you got coming in. And I find one of the big things is like even subscription costs. I don't know how much tech you got in your business, but that was a big thing on mine. I'm very tech heavy because I leverage it because I don't have a large staff. I have one accounting assistant right now. At one point I had three people working for me. But I mean, I leverage the time and I leverage technology, CRM systems and that kind of thing. And that's one of the things that in my own personal business, that's something that I looked at. And then when I started working with clients on it, it was huge. It's huge. Or advertising dollars. I remember having a conversation with a client and saying, you spent X amount of dollars last year on advertising. It was pretty high. Who came in from that? And they couldn't answer the question.
Yeah.
So they weren't tracking, okay, what's the return on those advertising dollars?
Yeah, and I think so. When you go to just for that fact, like we looked at stuff pretty heavy about 8 months ago, and we kind of did it with the idea that we knew. I'd like to think that we were a little bit ahead of the curve of like where things were happening, but we kind of looked at stuff and could see the writing on the wall. Like, hey, this is just not going to be. We can see this bubble happening.
Yeah.
Like, you got a couple years that are just going to be massive outliers if you zoom back and look at it. And what happened was, most of the stuff we looked at was like, what's the stuff we don't really need that we might have just gotten lazy and had? And some of them were like, even as simple as like the amount we were paying for garbage. Like, we really didn't generate that much garbage. And I mean, that's like a simple thing. But then we went down to, we did some advertising things. We looked at it and like, okay, is that what we need to spend on? Or, okay, we might be advertising there, but what's the goal of that advertisement? Or marketing campaign, and are we in a position right now where that makes sense to do it? And a couple of things we just said, hey, we think it works, we know it works, but it's not really we don't really need to bring that in or do that now because our focus is somewhere else. So I looked at that as like, it's good but not needed right this second. I call it like I've probably heard this. I took this saying, but like seasons of your life, seasons of your business, or it was kind of like a season where like we just didn't need to do that, so we rearranged some stuff. And the long and short of it is we did make cuts and we looked at efficiencies and this is something that one of my favorite parts of the book, and it's kind of almost it's part of it, but it's like semi-secondary to all the math numbering. It's the idea of just like the efficiencies. And one of the things that he says in this book that I go back to a lot, and I've said this to many people, and Jen's probably would roll her eyes out there because she's heard me say it so much. But he uses a story in there. He's talking about how do you produce more with less.
Exactly.
And the story that he used, and this for people that are listening to wrap your heads around, because this puts it in context, and because we live upstate, this is a perfect example. He goes, if you can say you can shovel a driveway. And he goes, you can shovel a driveway. You can actually shovel 2 driveways in an hour. And you're like, okay, that makes sense. 2 driveways in an hour. He goes, okay, great. Now I want you to shovel 4 driveways in 30 minutes. And what happens on that, the idea is how do you do more with less? And he said, and I think one of the lines he wrote is, how can you double the output by basically cutting in half your input?
Right.
So again, if you can shovel 2 driveways in an hour, how can you shovel 4 driveways in 30 minutes? And what it does, it's, you hear these terms, big questions. It's a big question. So it gets your mind going from small to now it's like, oh, wow, I got to really think outside the box.
Yeah.
And I go back to that question quite often. It was this might have been like divine intervention. I got the book yesterday, opened it up because I wanted to review my notes. So I wasn't like completely like not, in the cobwebs.
There's
here.
a lot in there.
There is, but the first page I opened up to was that staring me in the face there. And I was like, some reason I had to see it. So.
Yep.
But the efficiency aspect, yes, we cut expenses. Our expenses were, if I was to use them, we haven't implemented this, but my expenses were too high, and the taxes were fine.
Yep.
What it came at the detriment was the owner's comp and profit.
Yep. Yeah, that's where, you get into conversations, say, how much did you take out of your business this year? And they can't tell you.
Mm-hmm.
They don't know because they don't understand, depending on if they're an S Corp or sole proprietor or whatever, there's different ways that you take the cash out of your business. And yeah, because the cash is all lumped into one place, there's no place to see it, to see where all that money is going.
And I think I think one of the things we, like in our business, and I'll just like pull back the curtains and just use this as the guinea pig, is like we don't have a good system for separating that. So like we have an idea,
Right.
like based on trends and stuff. But I think that what this does is it gives you a roadmap that you can look at and have a systemized plan on, like, okay, if you want to start to grow that, how do you do it versus just throw it all in and just kind of balance, kind of what I do. Like I was saying before, I have a general feeling and idea, having just looked at the numbers over and over.
Yep.
But if you were to tell me to calculate it, I'd be like, I don't know.
Yeah.
And I think that this book lays out a really good groundwork for how you could actually legitimately show dollars in, dollars out, where it's going. So I don't want to speak completely in macro levels. So I mean, you've done this. So I'm going to let you speak. Kind of explain the general principles behind Profit First, and why you like it. Actually, why don't we do why you like it, and then kind of just take us through, what you do with clients, or kind of the general idea behind Profit First, and like some of the steps and more of the details of it, I guess.
Right. So, what I like about it, it's easy for a client to understand. They won't sit down typically. If they sit down and look at a profit and loss once a year, that's about all they do. And then a lot of times they have questions with it. If either they have internal employees that are working on it, or they're doing it themselves, or they have a CPA, and they look at that profit and loss, and there's all their ultimate goal is to have the stuff, all their accounting in order, and do their tax return at the end of the year. What this does is it kind of gives you a framework, kind of guardrails as to where your cash is. And it's much easier for a business owner to understand if they're much more likely to go into their bank account online and look at their 5 bank accounts and see where that cash is, as opposed to sitting down with a profit and loss statement. And if they see they only have X amount of dollars in their operating expenses, well, then that's all they can spend at that point. Don't be bringing it below zero or you're in trouble. So I think that process, that's the goal, is to get it so that they have clarity in their numbers. When I start with clients, we don't necessarily start right with the finances. The first thing I want to find out is, what do they want this business to provide them? A lot of times people are starting out in business and they have a skill set, and they say, well, this is something that I want to put out there. But what they ultimately do in that case is they make themselves a job as opposed to a business. So they're always working in the business instead of on it. So I have that conversation because sometimes, somebody else start a business and they really don't know how they want it, what they want it to look like, how much they need to make. We look at their lifestyle. What do you need to? How can that business support you, and how much do you actually have to make? So we start with those questions, and then we get on to making sure their financials are in order. A lot of clients of mine either have somebody that's in-house, they do it themselves, or they have us do it. So we do. I have an accounting associate that helps with like just reconciliation. So if we do the books internally, we have the books done. And that way, when we have our quarterly meetings, we know where they are financially. We're not guessing. We're not waiting on somebody to do the books for them. We do that. And then I work with other CPAs too. So I don't necessarily have to be the one doing the tax return. What I do is I work with other CPAs, and I kind of help guide my client. We make sure that all their financials are done by the end of the year. And with my financial planning background too, that kind of sets them up with the accountant so they know what we're trying to accomplish. I'm really big on working with other advisors. I've always done that. Either if it was an expertise that I didn't have, I knew a lawyer, I knew a financial advisor, I knew an insurance person, I knew somebody that could be brought in and work with them. And I'm one of my clients called me an interpreter. So sometimes they're sitting in the office with a financial advisor or a CPA, and there's kind of a disconnect. There might be a disconnect, and I can kind of explain to the client what the CPA is looking for, or I can explain to the CPA what the client is asking, because they don't know how to ask the question to make it clear to the CPA. So that's how we work with clients, and it's all individual based. I mean, everybody's everybody's different. So, and that's how we work, and that's how we put profit first within that framework. So we do some just plain consulting where they take care of their own accounting, their own tax, and we help them with the profit first implementation and the quarterly meetings, kind of almost like, I don't know, quarterback, I guess, a coach, somebody, an accountability partner. So we partner with them.
Coordinator.
Yeah.
Yeah.
And then I do a lot of coordination. I do, if I'm not the one that's doing the tax return, I'm coordinating with their CPA or accountant.
So so you would obviously look at all the numbers, and then that you come up based on. So we're looking at kind of that text box right there, that chart. Is that pretty much what you would go off of? It's a pretty safe number.
It's pretty good. So the percentages that he puts in the books, he did a lot of research. He's a big research guy. He's done it for quite a few years. And what they did, these aren't. Sometimes people look at ROI, return on investment, those or KPI, key performance indicators and stuff. But what this is these percentages are what healthy businesses are doing, the ones that are thriving, and that's where he got these numbers from. They're not just, looking at particular indicators. You can get into that more, depending on your business. I tend to focus we focus mostly on businesses that don't have inventory, that don't have sales tax, service-based. So, and I find that area pretty interesting, and that those are the people that those are the owners that seem to need help. That normally, if you've got somebody that's say a big contractor or has a lot of inventory, they have staff, but there's a lot of S corps, LLCs, sole proprietors that are service based, and particularly if they're running it all themselves, they don't have the time to look at these numbers. They just, they're too busy. They're in their business and they're not looking at this. And of course, at some point, if they want to sell that business or something, and they haven't been keeping track of their cash, it's the valuation of it may not be as good as if they had kept track of everything all along. Yeah.
So if we look at, so if you were to take a business and, kind of going off the idea here is that everything goes in, and again, I'm kind of brushing up on this, so you can definitely jump in. But the money goes into the account, and then you start sectioning it off by these four things right here. Or these four, sorry, I'm down.
So so everything comes in. We'll say this is a service-based business, so they don't have subcontractors or materials and supplies. So everything comes in. You go off your real revenue number. So like in this example, say it's $250,000 is your real revenue number. Then according to these percentages, you should be setting aside 5% for profit, 50% for owner's pay, 15% for tax, and 30% for operating expenses. That's just just an example. So what you do, all the income comes into one bank account, and then you have 4 other bank accounts set up, and you allocate these percentages. In the book, it's recommended the 10th and the 25th. I tend to find that is a good way to do it. Some businesses, their cash flows in every week, and they want to do it weekly. I try to get them in the 10 to 25. It's less tedious, I guess you'd say.
It's more batching.
Yeah. Exactly. So you're sitting down. You might sit down, half an hour a week, and just make, or every other week, just to make sure you're putting the money in. And because you have those bank accounts, you can, if you got them online or you can put them on mobile on your phone, and you can see actually the percentages. They're always with you. People bring their phones wherever they go nowadays. So those percentages, you do that on the 10th and the 25th. And also you sit down, like myself, and for my own business, I sit down on the 10th and 25th, and then I do my bills at the same time. So you're not doing, sometimes people, I think in the book, Mike talked about, because somebody asked me, I did a presentation last week for Lake City Co-working, and somebody says, where did you get the 10th and the 25th? And there's a story in the book that Mike was sitting with his accountant, and he had his laptop out and he was writing out checks, and the accountant looked over his shoulder and says, what are you doing? He says, well, I'm just making my bills out. She says, you doing that how often are you doing that? And I think it was like every day or every week he was sitting down, and it's not efficient.
Yep.
So she says, why don't you do it the 10th and the 25th? And the light bulb went off in his head, and that's what he put in the book. And he started doing it that way. And that's how it got in the book. It was just his accountant noticed what he was doing.
I was going to say, most things are kind of due like the 1st or the 15th.
Yeah,
was kind of
exactly.
The idea.
Yep.
And I think if you know, and it goes back to batching. So if people don't know what batching is, and I do this with my email, and I do this with I try to do this more with stuff, is that batching basically is like it combats task switching.
Right.
And it combats the idea that if you like, so task switching means if you go from one, like say you're working on a project and the phone rings or a text, you answer the text, then you try to go back to what you were thinking about, and then someone walks in the door, and then you go back. And if you've ever been in that scenario, that is just a complete, whirlpool into an abyss of just a wasted day. The whole idea of batching is, instead of checking your text messages every time they come in, wait 2 hours and batch them all in about a 5-minute span. Just answer them all right off. And my email, I batch. I got this actually from Tim Ferriss, who's big on stuff like that. I check my email at 11 o'clock and 4 o'clock every day. So 11 and 4, I have an extension on my computer that I absolutely love, that I can block out my email.
Yep.
So, and just so Lori knows I'm not lying, like there's my inbox right now, it's 0.
I believe you.
But what it does is it allows me at 4 o'clock, like when this podcast is done, I'll check it. I have a couple client things to get back to, and I go through it, and I can batch it all, and I'm pretty much all done that in about 15 minutes. So if you really look at your entire day, where people get sucked into answering these one-off emails, you do it all at one shot, and you really can lump a lot of them together.
Yes, you can.
So that's the idea of doing that. So the same thing with paying your bills. Like it's just a mindless kind of thing you do. Put them all in the same time, so you're not re-grabbing the checkbook out, shutting the drawer, taking just kind of getting the mindset or in the mode of writing off 1 or 2 checks. I do it with check deposits too. I'll get checks and kind of bundle them and do them all at one shot. So I mean, it's just being more efficient. So
did I say the 10th and 20th? It's the 10th and 25th. Did I say
that?
Okay, I wasn't sure.
Yeah. It's about 5 days before most things are due. That way you can process, and all the wiring and stuff can happen. But so I think now, what's the difference? I forgot off the top of my head. So obviously taxes are self-explanatory. You earmark taxes. And you pay. That's probably the one you're going to get the most in trouble for if you don't pay them.
Absolutely.
But your operating expenses, and that's money that you spend to run your company.
Right.
So profit and owner's compensation. It's owner's comp, right? That's
right. Owner's comp. Yep.
Yeah.
Owner's pay. Yep.
So can you explain the difference of those two?
Yep. So profit is cash that comes to you. It isn't. I'll explain it the other way. Owner's comp is if you're working in the business. So if you're an S corp, your salary is owner's comp. If you're sole proprietor, it's the draw that you get out. The profit is above and beyond that. So we take that out first. And even in the lowest category here, it's 5%. And you might not have 5% profit at first, even if you can do 1%. Just do 1%. I know it's not much, but it gets you. The whole point is to get you in the habit of doing that. Is to allocating. And that is, the profit is above and beyond. So like if you had, for example, if you had Ford stock and you got a dividend every month, and then you could spend that. Ford doesn't ask you to take that money, give them the money back. So you don't take your profit and you don't put it back into your business. You take it out and you use it for yourself as the owner. So what I actually do, my profit, I use for a vacation account because I'm not so much about buying things, but I like experiences. So my husband and I, we get to take nice vacations every once in a while, and that's what we do. I put all the profit in there. So you got to kind of give yourself an incentive for it. And the owner's pay, you make sure that those two things you take out first. And if you don't have enough when you first start, that's your business screaming at you saying you're spending too much on your operating expenses. And this is a process. So what we do is you don't hit those. These are target allocation percentages. They call them TAPs. So when we start with a client, we start at their current allocation percentages. It's where they actually are. And if they're supposed to get down to 30% operating expenses, sometimes they're at 80, sometimes they're at 90. So then what we do over a period of time, I run them out at 6 to 8 quarters. So every quarter you adjust your operating expenses by that little bit of percentage, where you're taking off 1% to 2% off operating expenses every month, and you're allocating it to your owner's pay, profit, and your tax. And that's kind of what you're doing. You're doing it over time. You can't come out of the gate at these targets unless you've been doing really well. Some people, they do, but for the majority of business owners that first start this, they look at their operating expenses and realize just how much all that is costing them.
Yeah, and I think one of the ideas, so let's use the, I'm just going to use this percentage here. And everybody, we're looking at it, we're actually reading the book, and there's a couple good graphs. I think if anybody, we'll say this probably at the end and a few more times through, but it's Profit First, Mike Mercaldi. So Mike Mercaldi, he's got a few other books, but Profit First, I would just suggest you read it. If you have any kind of business, I think read it. It's a paradigm shift, but I think it makes a lot of sense. It's almost to the point like, why wasn't this normal? Why isn't this normalized? But
I know.
Because it's very simple
It's the old envelope system. Your grandmother's envelope system. That's know, if you had people used to take envelopes and write on the envelope, here's for groceries, here's for the auto, here's for the house, and instead of using envelopes, you're using bank accounts.
I didn't realize it. I mean, I did realize this. I forgot he has like literally a quick setup guide. Like in the back.
He
just
does.
Kind of simplifies it all down for you, which is cool. But so if you start off at like operating expenses, I think we said what was 30%. So this is a business. If your real revenue is between 0 and 250K, but you say you're at 60% operating expenses, and your idea, and I believe they said that each quarter, like you said, is you try to find. Is there a set print? Is it 1, 2, 3%?
It's not set, but you at least try to get 1% out of something. And I usually, when I first implement these, what I do is we do what's called an instant assessment. And that's what that is. We assess where they are currently. And we do an assessment. And within the assessment, it says where they are and where they're looking to go. Yep. So, it tells us right away, where the problems are. And from that, then we do what's called a rollout plan. And I normally do it the first time is usually, I think, 8 quarters. So that would be over 2 years. And then we roll out the plan, going forward. And that way we make adjustments quarterly. So you're not making big adjustments all at once. One of the biggest things that people do too is when they start this, they start out, well, I'm going right to that 5%, and they can't make it, and then they get discouraged and they stop.
What I was going to say, I think one of the things he said in there is pick a number that is consistent, that can be done consistently.
Right.
And I think this goes for a lot of people, myself included, is that it's easier to climb, like, kind of take the idea, if you had to like look up to climb Mount Everest and you're standing at the base of Mount Everest, it looks very intimidating. If they were to stretch you back 50 miles and look at Mount Everest, you're like, oh, I can cover it with my thumb.
Yep.
It's the idea, it's like a slow climb to a distant horizon. That's kind of the idea here is that, I think you said it, like if you go, say it's 1% over a year, well, that's 4%, and actually ends up being 8% net. I mean, when you 4 off one, 4 to the others, I mean, you're making some big
progress,
gains. Yeah. And, obviously you do that, and that's at the bare minimum.
Right.
So I think the idea is, it's baby steps, but I do think when you go back, because most people, I mean, your taxes are your taxes, and the taxes shouldn't really change much, because that's still based on most of your revenue.
So And people
maybe a
say,
little
well,
bit because of the expenses right
say
off
why
part.
15%, but they're basing that 15% on your total top line revenue. So it's usually enough to cover whatever you need. And then when we do it, I mean, we look at when we're doing their books too, then we know how much they've already made for estimated payments during the year. And so quarterly, if we're meeting quarterly, then we can adjust as we go through, especially if I was the one doing the tax return, or I'm at a minimum talking with the CPA. I just went through this right now because we do year-end planning usually about October, November every year. And then we talk with the CPA and say, hey, this is where they are right now. How do you think, is this enough estimated tax set aside? So we can adjust it. It's a matter, we look forward. And when we begin implementing it, as far as figuring out where you should be, we go through slowly. We see what kind of cash flow they're going to have in the next quarter, and then we can adjust it from there.
Yeah, because I was going to say, out of the 4, taxes to me seem like they would probably have the least amount eventually in movement.
Right.
Most of your movement comes in the form of taking out of operating expenses into either profit or owner's comp, depending on how you want to divvy it up. And I think first off, the idea of that, revenue minus expenses equal profit, I think he says it right in the beginning of the book.
Yep.
It's profit minus revenue equals expenses, right?
It's sales minus profit equals expenses.
Oh, that's it, yes.
Instead of sales minus expenses equals profit, which is the GAAP principle, that's why when you look at your profit and loss, the owner gets confused at the end of the year saying, okay, I made $50,000. I have $12.19 in my bank account. Where's the money? Mm-hmm. It's because cash flow is different than an accounting number on the profit and loss statement.
Yes.
Yeah.
So that's kind of like the paradigm shift. That's probably the big paradigm shift.
That's the big one, yep.
And then from that, this all builds off of it and kind of proves that theory. But I think the idea of lowering owners' expenses, because that's, have you had anybody not come to you and their expenses are under what they should be?
Under what?
Everybody's over.
Everybody's usually over. Or I had one recently that was pretty close, but then on further review, we kind of kept digging and realized, okay, that was just an anomaly. Especially this last 2 years with all the PPP loans and all that kind of stuff. Yeah. That kind of, like when we were doing assessments before, we would look at like the prior maybe 2 to 3 years. Well, we can't do that now because there was so many anomalies in the last 2 years. Now we're just looking at 12 months back and using those cash flow numbers.
So again, 99.99% of people are going to be overexpending or overspending. Yep. So if you were to tell most people, or kind of what's a general idea, if someone came in and you're like, okay, you got to limit your expenses, what would be like, hey, whether it's percentage wise, or let's look at these portions of the business. You obviously just mentioned like streaming, subscription services, but where do you find most people have to look at, and where should they do most of their cutting in order to free up those percentages to reallocate to, say, profit or owner's comp?
I think one of the big, obviously the subscription services, that was a big one. That's when I see right off the bat. Just talking with your insurance agents, stuff like that, as far as can you get a different insurance policy? Workers' comp, horrible. Workers' comp, any of your general liability, any kind of insurance. Talk with your insurance agent. Are there policies that you can get where you have the same benefit with less expense? I think that's the other thing we kind of look at. And you were talking about trash removal. Talk to, is there somebody else that could take out the trash for you that would be less expensive? Those kind of things. So,
because I look at most businesses, when you look at, because and I think he talks about this, like most people's biggest expense in a company is payroll. Like that's usually your top one, and that's, beyond the owner's comp. I mean, that owner's comp's part, I would say, they separate it, but if you take away owner's comp, just like if you have staff or anything like that, that you're paying, or W-2, how would that, look, and I think he actually says in it, that's like what you want to try to cut last. I mean, you do have to make
Yes.
cuts, but I think you also don't want to just completely go bare bones and
Right.
have nobody.
Sometimes people get in, they have the issue of overhiring. There was, look at the tech places right now.
Just laying off, yeah.
Yeah, I mean, they I don't know. It just, everybody kept thinking this was all going to go for forever. But efficiency with your staff, your working, the employees that you have, can you consolidate a position? You don't want to. You want to have, make sure if you plan on hiring, that you can afford that person, and do you have the people in the right seats? Sometimes you have people that are better off in a different position in your business, and you lose efficiency because they're not fit for that particular job. So that's something else you can look at too.
Because the main, like, because I read this book, and again, I didn't implement the whole concept of it, partly because I think someone needs someone like you to implement it versus just implement it. It's kind of like anything else, because number one, you walk them through it, but there's an accountability level too.
The accountability is the big piece. Yeah.
And it's like going to the gym. Like, you can go to the gym, but if you hire a personal trainer, you're going to go to the personal trainer.
Yep.
And I think if you, like, I looked at the idea of like cutting the expenses, and I'm like, okay, what can you go through? And we went through quite a bit. I mean, we went through every line item. It's like, is it truly a necessity? Is it just like kind of a want, a need, a luxury, whatever? And we cut a decent amount of stuff. But then I also looked at, like, you can only cut so much.
Right.
So then, you can't just completely turn this into, a skeleton crew kind of thing.
Right.
So then you end up looking at, okay, and you just mentioned it, the efficiencies of the business. Like, how can you be more efficient?
Right.
And I've really tried to, on a personal level, just with the business, family life, I have 3 young kids and just a lot going on. There was some stuff that we have to do. Like, I'm not in a position where I can't just work on the business. I have to work in the business.
Yep.
The problem is both those hats for me are full-time job hats.
Yep.
So then it makes it more difficult. So I end up looking at, and the fact that my time allocation to both of those has been tightened on both ends because of kids and drop-offs and pickups, and you're a mom, so that's
Galen.
Yep, you're a mom. So, and that's the thing, like, and I go back to it all the time, like, there's so many people that have dealt with it. It's fine. It's just it's a season of my life, and you deal with it. So, but I look at it as, I had to look at some stuff, and I said, you can cut expenses, but I said, then you have to look at efficiencies, because one thing that I wasn't willing to sacrifice in my end was my kids and my time, my wife and stuff like that. So I do spend a lot of time with my kids and spend a lot of time with my family by design. Like, I don't want to be the father or the husband that they never see.
Yep.
So with that being said, I ended up looking at, how can I be more efficient?
Yep.
And then and that's why this book jumped out to me, because it's on the financial aspect of being more.
Right.
Now, I'll be honest, I have not implemented this. So I'm not a good practitioner. The concept makes 100% sense.
Right.
And it's one of those, like, I want to implement it. So we may be talking after, but it's kind of one where I think it's a great system.
Yep.
But I ended up looking at efficiencies regarding, like, my favorite book I think I read last year, one of my favorite books, but probably the one I've implemented the most, is The One Thing. Have you read that one?
Yes. I'm an avid reader. I'm just,
talk about this.
Even the back of cereal boxes, it doesn't really matter
So
to
you
me.
read that book?
Yes, I did.
Yeah,
quite a while ago, but I've read a lot of stuff like that.
So that's kind of my favorite one, but there's other ones. There's like the 4-hour work week and things where it just kind of, makes more efficiency. So I'm really trying to, in my head, really focus on certain things and get them done. And one of the things that The One Thing talks about, which this does a little bit too, is that you have to, and it's tough because it's like, it's out of your comfort zone, but it's the idea of accepting, basically embracing chaos is the term they use.
Yeah, I call it organized chaos. That's my life.
Yeah, and
because my whole life is on an Excel spreadsheet. I do time blocking right from my workouts in the morning till at night, and that's
yeah. I mean, this is my calendar.
Oh yeah.
So you can see now. The only reason these are blank is because my blue, like this is my one thing,
Yep.
411 that I take, and I
Yep.
put it into here. So like podcast, make a couple calls, home.
Yep.
So I have like things blocked off. But like all this white space was things that I actually was very efficient. I just, once I get it done, I just cross it off because it's
Yep.
like more of like it's not a to-do item. It's to
It
do.
should be a did I do it list instead of a to-do list.
Yes, and I, so like this one, like this actually was here, and I did the first part of this basically till about 1:00. So this was actually a little bit. I shrinked it up for tomorrow, but I still have to do some stuff on it. So I just like, okay, I can move it over. But I did hours of really deep work on that today and got it done. So tomorrow's like the next thing, and it's like my eyes are crossed. I'm like, oh, I'm so like my brain's sapped. So this is fun. This is like a nice relaxation thing.
Yeah.
But this is, yes, that's my. But I audit my calendar every Sunday morning is when I look at stuff. So I just plan out my day. I prioritize the week, and then I look at. And this is a little bit off topic of that. I look at my calendar. I look at all my like potential things I could do, and then I go through and I prioritize and say what's the most effective, what's going to be the biggest bang for my buck, whatever you want to call it. That then goes on, and I add in only to the extent of things that I think I can get done that week, not to overwhelm me. And then those, I then take them on Sunday morning. I go through with my week, and I time block them in my calendar so I know I have a time designated to that task.
Yep.
Based on, and I kind of give it, a conservative timeline.
So you're doing everything right as far as, far as that kind of blocking, because I think that that is huge. But block your family time out first. Block all that gets blocked first. I do mine too on Sunday. Another guy I listen to, he actually does it on Thursday. He says so he doesn't have to worry about the weekend. It's already done. But Thursday I'm doing, like on Thursdays I do marketing, networking type of things, and I do client work. I think Monday and Tuesday, and then Wednesday and Thursday I put in
So you
calls.
batch your days too.
Oh yeah. I had to. I had to be more efficient at what I was doing. And this past year, I don't do individual tax returns anymore. So this is my first tax season that I'm not in tax season in 35 years. So I'm working just with the only returns I would do with the ones that are doing accounting work too.
Okay.
So accounting in profit first, because that's in everything. But yeah, this is the first. So it's really weird for me right now.
Does it feel good?
It feels awesome.
Because I mean, like right now, you're like in it.
Oh yeah.
Like this is.
Right now, so the girl that works with me, she took over my individual clients, and so I still have a Zoom call with her once a week because she still does the accounting work for me. From her, she lives in Morris, so it's like, she used to come in. Nobody comes into my office anymore. So it's, again, and I work all remote, so it's, I talk to people all over, but it's pretty. The time blocking has been a huge thing for me. Finally.
Yeah, and time blocking I got from my dad. I mean, that was something
cool.
when I was young. I mean, I've heard him, he's time blocked as long as I can remember. And then I started doing that. He taught me how to do that. Well, this is my 13 years ago. And I live my life by time block, but I live it like, and this is a thing that I've gotten better at with the prioritization aspect of it. And I get anxiety if I don't get things done. And that was something that was like, and I still fight it. It's not like something that just like went away and like I don't feel that anymore. Like it happens. But I've gotten better about like just saying, okay, take Sunday, throw everything, like organize it then, focus on it then, take out the stuff that you can do this week, time block it on your calendar, and just be good. That's your week. And then when you go back the next week, most of those big items will be done. You'll have some other things that will probably creep up, but then it's back to, okay, prioritize it. Like, even though you added 2 items and took 5 off, those 2 probably aren't taking precedence over other stuff. And those might stay on for months and months and months.
Yep. Just keep moving them.
Yeah, because they don't take
priority.
Yeah. And the thing is, some of these things you would like to do, some of these things would be nice if I could cross off the list, or maybe this might, upset somebody if I don't get it done next week. But it's like in your grand scheme of whatever you find valuable in your life, if that's not priority for you, really a lot of these books have, and a lot of the people, whether it's podcasts or audiobooks or just interviews I see, a lot of them always come back to, like, you do have to put yourself first and be selfish. And not that you can't be helpful to people, but if you're too giving,
you have nothing left.
Your time is gone, and then you don't make progress. And I think that happens to a lot of people that are not even people that are people pleasers, but just people that want to do a lot of stuff, and then you realize at a certain point time's finite and you're a human and not Superman, and that like you can't do it all. So then it's like, what? But you have the same hours,
Right.
Or maybe slightly limited depending on situation, but same. But half the time is like you can cut the inefficiencies out of your life,
Right.
And really the cool thing is like I feel if I can take care of like I call it like that one thing. If I can take care of that one thing, and sometimes that one thing might only last an hour.
Yep.
But the weight off my shoulders feels great. And
Yeah.
then if I have time, I'm like, okay, well, I got done the big thing. Maybe there's like item 2 or 3 that I could probably like almost sneak in today that might have been due tomorrow or Friday, or like depending, later in the week. I can sneak it in, just cross it off my list, and I'm already that much better. But once I get it done, then I feel, like I said, this weight lift off of me, and I feel a little bit more free and a little more like easy going, because my anxiety of like not getting that done, I took care of it early.
Yeah. Yep.
It's kind of like Eat That Frog, Brian Tracy. That's another big one.
I tell myself that too. Eat that big frog first thing in the morning. It's just get it done. And I begrudgingly will drag myself downstairs. Say, "Yep, I just got to do it. Be done."
So how do you like in your business, especially being sole proprietor by yourself? Like where's your internal drive to just say, whether it's to work out, whether it's just to if you don't have a client meeting, or what forces you to go down and just work when no one's watching you, kind of thing?
I think it's just the end goal is to design a lifestyle that allows me to take care of family. Right now we have older family members that they're having issues, and I got one grandchild, a grandson, and I got a granddaughter on the way. So I want that flexibility where I can it's a work optional lifestyle.
Yeah. It's
not really retirement. It's not really, and it's just the option to be able to do that. And I think that drives me. Spending more time with my husband too. We both flat out just ran with it since we started out young in our 20s, and we just took off running, and we've just keep going, and just now is the time to kind of settle down with things. And I want to spend some time with him, especially tax season, because he's a self-proclaimed tax season widower. So I was tax season for 35 years, and he had to deal with that too. He'd come home, and at that point, I was doing meetings all day and in the evening, and it was just, it's tax season is what it is. Any accountant out there knows what I'm talking about. But now there's more efficiency in my own time. And, working. And that gives me a lot of incentive to spend family time. I think it's the biggest thing.
How much, if you had to put a percentage of your week, how much do you put on business versus in business?
About half right now.
Oh, that's great.
Because because of the rebranding, I rebranded everything probably 2 years ago. Redid my own website. I do not suggest anybody that not an accountant to do the website, because I had to rebrand it because everything related to my work was all accounting and tax. A lot of these companies will come in and they do your website for you, but nobody had the sense of the branding that I wanted. So I started a whole WordPress site. And I don't know if you've ever heard of Donald Miller, but he does a lot of marketing stuff. And I designed the website based on that. So most of everything is on one page. It's not perfect, but it does say what I want it to.
Yeah.
So yeah, about half and half right now, because over the last 3 years, I moved out of individual tax returns slowly to focus more on the consulting work. So and that's like the idea of, and this goes back to, I'll take Tim Ferriss as a perfect example. Like in his book, The 4 Hour Work Week, I think it gets, the name. Oh, it's misleading.
The name's very misleading.
Yep.
And it's the idea, like, yes, you can get to a 4-hour work week, but he's not suggesting you work 4 hours. And
right.
Neither does he.
Nope.
But what he's saying is that you want to make efficiencies and you want to make systems in your business that you really could only work 4 hours a week if you wanted to.
Right.
And a lot of it is basically a book on efficiency at a scale level. But one of the things he talked about was like the Pareto principle, like the 80-20 principle. And I think like if you look at, and that's something I've tried to do and I want to do more with because of numbers, but I track some stuff, but I also don't track it enough And I've done it in a couple of things. We did it with a couple advertising campaigns. We've done it with a few things where I have used that principle because it pretty much showed true.
Yeah.
Which is good. Like, even if that saved you a few, not even does it save you the money, but it saves you the idea that there's the efficiency in the end, because by taking, like, this just as one example, like I kind of took the Pareto principle idea, looked at this marketing thing we were doing and how much we were spending basically each month, cut down a portion of it. So we saved that, but then also because I saved it, now the marketing campaign is going more to a strategic area.
Yep.
And so I know that anything I get from that is more of my like ideal location or client.
Right.
Because I look at it too in my business, I have to drive. So
Yeah.
I have to look at the efficiency standpoint of like, okay, not that I drive all around the county, but all things being equal, I'd rather drive 10 minutes to an appointment than 30.
Especially with gas prices the way they are right now.
But it's true. It's like, but a lot of it's the time aspect.
Oh,
It's
yeah.
like, if my round trip is now an hour just drive time versus, like a little 5-10 minute just over here and there.
Right.
So that's where I'm also trying to look at. So it's not only money, but you're looking at time efficiency too. So the on the business aspect, I kind of, or you said with simplifying your life, that kind of almost goes into like, hey, if you're getting a good amount of output in just working with half of what you were working with.
It's exactly what I did.
Yeah.
I slowly broke down. Over the last, I think it's probably the last 3-4 years, I kind of had a direction of where I wanted to go. And, it just became, what could I do? I'm very into my clients' lives and stuff. I mean, it's a relationship. It's not, these aren't people that are just coming in and going out. I know who they are. I know where they work. I know their families. So it was tough for me as far as, letting these families go. I think that was the part that was the hardest, but it's, you only have so much in your reserve. So, and I didn't want that diluted. So slowly over a period of time, I cut down on the number of clients that I had, and I had other people that could take them. So I have other professionals in the area that were willing to work with them. I want to make sure everybody was placed. I wasn't just going to say, "Hey, I'm all done. Help, find somebody." That's not the way. That's not good business, and it's not. I wouldn't like anybody to do that to me. So it took time to figure out what I wanted to ultimately get to. And it's this past, probably the last year or so, finally starting to see where I'm getting to. And this is a lot of what I do with clients. We aren't just talking about, just their numbers. We're looking at what kind of life do they want to develop. I think that's left out a lot. Sometimes I remind them, you have family, you can't, this business isn't the be all end all. It's a tool to get you where you need to go. And you have relationships within there, and that's, that has to be managed.
Yeah, I think that's something I've been thinking about a lot. Probably the last year, but even more heavily. Yeah, I'd say probably heavily last year is kind of looking at, and this is just change. Like I look at like changing my life and just certain things, and a lot of it is, kind of going back. Like, what do you want your end goal to be, or I kind of like the idea, like, life by design. Like, how do you want to design it for yourself? And I think one of the big ones for me, I really like my freedom to do stuff. That's why I work for myself. Like,
right.
I don't like answering. I mean, you have clients and stuff, but it's not the same. Like, because
right.
I have the options to tell them no,
Yep.
not in a bad way, but like if I tell them no, I lose a client. I don't lose like my career or anything like that. And I don't do that, but I'm saying I have that flexibility if I need to do it. So I think the freedom of time I like, and I also like that there's no ceiling. Like, meaning like,
oh yeah, you're not limited. You're only limited by yourself. So
correct.
So it's self-employment isn't for everybody.
Yeah,
But there's a lot of ups and downs. But it's I think there's a lot less confinement as to what your income level is and what your work environment has to be.
I think, like, do you ski at all?
Cross country, but I haven't done it in a while.
Okay, so like I'm kind of gonna put an analogy together really quick here, and it might make sense, may not.
Mm-hmm.
But it's like, I find that if you're self-employed, entrepreneur, whatever you want to call it,
Mm-hmm.
that it's like going downhill skiing, but you're kind of pushing your limits. Where like you're
Yeah.
going to get down faster, you're going to have more adrenaline.
Yep.
There's a chance you could completely wreck.
Oh yeah.
And
Yep.
and then I find that people that are, which is nothing wrong with it. You get your salary and you kind of have, and there's people that like that stability.
Yep.
But those are the people that probably going to take a more gradual, flatter surface and train, get down slower, not fall, but
Yep.
and probably won't have as crazy of a story to tell back at the cabin or back at the lodge. But I think it's the idea of like you basically are just going downhill full speed,
Right.
and you're just cutting and you're
Oh,
trying
yeah.
not to crash. And there's sometimes where you're like, oh my God, I almost wiped out, but I made it. And that's what I feel like every day is. So like you get these moments, and it's tough because you do build up like a thick skin and resilience, because you get, there's rejection part. Like
Oh,
I get
yeah.
rejected every week with stuff. So it's like you learn to, it doesn't feel good, but you learn to deal with it. But then you also like, you learn to overcome stuff because you're just constantly
Yeah.
worrying, and then you're on cloud 9. Then
Yeah.
you're worrying. So it's like trying to manage that
Yep.
ride of emotions.
Yep.
I mean, I'm sure you felt that
Oh,
both ways.
God, yeah. Yeah. And it's, I guess what kind of keeps me leveled is, why am I doing it? If you can keep in mind why you chose self-employment, then, that kind of helps get through those times. Oh yeah, there's times, and there's times you do things and they just don't work out. And, but it's never a failure unless you don't try again and figure out what you did wrong. So it's okay to fail. Sometimes you need to fail quick. Sometimes you go down a road and you're like, okay, this just plain isn't working.
Yep.
I got to points like that too in my career. It's just, I remember telling my husband, I'm going to take this whole different direction. I think it's when I went to financial planning and financial advisory, got my retirement certifications and all that, got licensed, and then a few years ago I says, I just can't keep going down this path. It's not. I can keep all the education, all the experience I have. I'm just bringing that forward into something else. Sometimes people are afraid just to try something else, or move on. So that's a big thing.
What's the thing? You're never starting from zero
Right.
at that point.
You are not. Yep.
It might feel like it, but it's like, I had this, a friend of mine is kind of going through the same thing. And it was like, you're not restarting.
No.
Because you have this, like you just said, you have experience of different jobs, and now you know what you like and don't like. So
Right.
you use that and you build off of it. Like and like right now, I feel like in my mind, I don't know if this is true, but like in my mind, I feel I'm at like almost like a reset kind of thing. And I there's like, an individual a guy I like following, for a successful guy, and he's in real estate, and I follow him a lot. And one of the things that he talked about, and I've been on some webinars listening to him, and just, I just like learning from people. And one of the things he said is like, okay, you have a certain way of doing stuff. So like you have growth, and it's basically a ladder. You have growth, but then that stops. And what happens is you have to basically go from a vertical going up. Imagine going upstairs, like you go vertical, and then the flat part of the step. Then you hit this point where you don't really grow, but you have to redefine all your systems and the way you do stuff in order to go up to that next level. And he goes, it's not really like completely flat. He goes, you're going to have a dip. And someone called it the other day, I heard like a J curve, almost like you kind of have to kind of dip down, almost like go underwater for a little bit to come back up. And I feel, and he used another analogy of like, if you were on a trampoline, he goes, think of life or business like a trampoline. He goes, the only way you can go up is you have to go down. I mean, you have to push, you have to counterbalance or counter pressure the springs to shoot you up. So I feel like my last like 12 to 18 months, I'd say 18 months. It'll probably end up being about 24 months, but I feel like I've I've gone down and pressed down, but I feel like the work we're doing, even though it's not glamorous and it's kind of like a thankless job, because it should pay off and you will get that big jump forward. Right. So, I find that like entrepreneurship is a lot of blind faith where you work on stuff and you kind of feel like, because there's nothing tangible. I don't know if any of this is going to work out, but my hope is that I do, and I'm betting on myself that it's going to,
Yep.
and I'm putting in all the work for no pay, no anything, because that's how it works in our, like, your business too.
Yep.
Nobody's paying you to work on your business.
Right.
So, but the idea is I'm putting in all this like exhaustive work now that I will see the returns.
And I think system implementation, and kind of like what you're doing, is people don't take the time to, look at the efficiency and having systems in place and changing. Wow. Yeah. People sometimes they just, you keep going down that same road and you can't see anything different. So that's why I do a lot of reading and of course, when I started in '88, there was no real internet.
Yep.
you weren't born yet.
I won't say when I was born,
Okay.
but
So my son was in '88. He was a year old, but he's a computer security engineer at Salesforce. That's what he.
Oh, okay.
So what he does. So he started real young at 2 years old on a computer, and my kids both had saw a computer early. I think we were probably one of the few families that had one because I needed it for business, but. When I started out, there was no research. The only way you researched is you went to the library. You had CompuServe, AOL, and Prodigy. You had 3 different service providers,
Okay.
and you had to pay $6 an hour to be on CompuServe. So I would budget $24 a month so I could be on CompuServe to look for business owners and how to run a business and an accounting business, and just business in general. Or working from a home office, because that wasn't a thing. So when people used to say, well, you're home, I said, yeah, I'm working. And of course now it's a completely different thing, but.
So when you started, and I love hearing this because this is my 13th year in real estate,
Mm-hmm.
and in 13 years, it is completely different now than it was 13 years ago.
Mm-hmm.
So when I look at, like you're saying, you've done this for 35 years, you look at 35 years, you've seen even more of a transition.
Yep.
And what's going to be crazy is like anybody starting today, 35 years from now, will see even more because it just develops so quick. Now, AI 6 months ago was like this term, and now it's everywhere, and it's picked up so quick. And I think I just read,
It's a chat.
was Chat GPT?
Yeah, my son told me about that about 2 months ago.
So I tried to sign up when it first came out. I couldn't. There had too many users in it. There's more users. They showed the growth on it, and I think in the first whatever time period it was, first X amount of time,
crazy.
And Instagram had the record for the most growth to start, and this blows Instagram out of the water.
I just saw today they just started as a subscription service with it. They just started.
And there's a few other ones so when I go on social media, I try to use it as a tool to learn stuff. So I'm starting to follow AI stuff because I look at it as I embrace the change because I'm this is the way of the future, and I'm not going to complain about it. I'm just going to jump on board and just say, well, we'll ride the wave with all these millions of people that are signing up. So I follow a few feeds that are pretty good at keeping you up to date on it. So if anything looks remotely close, I'm like, okay, I like that, and I screenshot it, and then I kind of will spitball with Jen about how could we make this work, and and it obviously takes more than just a quick conversation, but right now it's kind of hey, look at this looks kind of cool, let's kind of keep it on, let's make a note to look into this fairly soon, but there's some stuff that is just the ease of doing it.
Oh yeah, even Canva now, I use that quite a bit for social media, and they have their own type of AI thing that's built in there now too. And
one of them, I was telling you, kind of building out a platform kind of thing where we need steps and things listed out, so it's tedious work. Well, apparently, and this was what we found out. There's an AI thing that you can basically screen record your computer, go through everything, and as you're physically doing all the motions, which doesn't take us long, it's typing out all the steps for you.
Oh, wow.
So instead, as you know, how much time that saves. So I'm oh, okay, so if we're building that out, let's look into this because even if we have to go in and edit it, I'd rather read through what they have and edit it than have to type it all myself.
Yep.
It's not even the typing; it's just the thinking of the processing and how do I write this out? So. I look at it as the efficiencies of time of what we're going to save. And, you kind of look at the future of that, but you look at, kind of that more to less. Like, okay,
Right.
think outside the box. How can I plow 4 driveways in 30 minutes?
Yes. Yeah.
Well, AI can probably do something to make me do that.
Yep.
Or it's like put in a heated driveway and then just snow
Right.
melts and then there's sure
Yeah.
But so what's the biggest change you think you found in the 35 years that you've been doing it? Just the rise
The
of the internet?
technology has been huge.
Yeah.
I mean, even we use a software called Loom. You might have heard of it
Loom, yeah.
before. So it used to be where you'd explain something to a client. You had to have them in your office, or you had to go there. And now we just do videos, or I do it for training too. If what I'm doing is I'm setting up training. So if my associate needs to do something, I just have a whole library of how to do it.
Yep.
The benefit of that too is that if I ever need somebody else to step in, you've already got all those systems in place.
Mm-hmm.
And I use ClickUp for all task management and that kind of thing. And that's kind of built in. We set process. I'm big on processes because I've had to do a lot by myself.
Well, and that's kind of the stuff we're doing because in our business, my dad's run our business for 30 something years. So when I came in, there was a learning curve for me to understand the business.
Oh, yeah.
And then just to understand it, not like work on the business,
Yep.
just purely learn how to
Yeah.
do my job.
Yep.
And then I got to the point where I'm like, okay, I understand my job.
Mm-hmm.
And then I got to the point where I'm like, okay, I can see inefficiencies in what we're doing. And a lot of it was just, we had to adapt as things grew. Like
Right.
just things were changing. So it's like, that worked fine 5-10 years ago.
Yeah.
We got to adjust it. So we had a mixture of that. Well, a lot of it kind of catapulted with doing a lot. Mm-hmm. We've done a lot since then, but it also mixed in with, my sales hat,
Yep.
increasing there, my responsibilities on the business increasing, my life, just personal life increasing with
Right.
responsibilities. So that got to the point where just a lot's going on.
Mm-hmm.
So on the business, now I'm going back through. That's what I'm saying. I'm taking a step back on a lot of things to implement the leverage in the systems and the stuff in the back end that I never had an opportunity to do because either lack of knowledge and then
Right.
eventually lack of time.
Yep.
So now it's like I'm sacrificing a lot to get it done, but it's more of I just know that one thing idea or focusing on priorities, I have to do it because if I don't do it, it's never going to get done.
Right.
And then you can't take that quantum leap up to the next
Yeah.
level because you're going to constantly be in this slow growth where it's really not, eventually it's going to hit a plateau.
Right.
So I'm trying to break that plateau in a time frame that arguably is probably not it's either the best time to do it or the worst time to do it. I haven't figured it out yet, but some days I go back and forth on that. But now in regards to Profit First, a little bit more on this is, how have you found, when did you start rolling this out? Was it in 17, 18 when you started?
20, let me think, it was probably 2019 or so. I started with the clients I had and if they didn't want to do the full thing, I was at least implementing part of it within the range that they wanted to. So then I started rolling it out. I really started pushing it probably, the last year or so.
Because that's when I saw you talk more about
Yeah.
it. And have you found that your clients have embraced it? Was there some pushback?
It's of course it's something new. So I knew internally how it operated.
Yep.
So expressing that to clients and expressing it to people that were looking at it was something that I had to learn how to do it. I've gotten better. Because, you think in your head, you're thinking in your head and it's in your head, but you're not really explaining it well.
Yep.
So it took me some time to embrace it and to explain it comfortably. And, but the difference that I've seen in the clients that are implementing it, it's like night and day. It's that clarity they get. And they have a framework now. Instead of just everything going all over the place, they can see how it operates, and it's a little at a time. Mm-hmm. We take little steps at a time going forward, or discussing this with them, and it brings out a lot of the stuff they didn't know was going on in their business. I mean, just didn't see it.
So because again, we're going to go back to the beginning. If you, say you're taking 1 or 2 percentage points a quarter out of the operating expenses. You're reallocating it. Like the
Right.
reallocation part's easy.
Right.
Once you can find a way to save it, then you're like, great, I'm just going to throw it in.
Yep.
But then if someone comes to you and says, listen, I'm doing 2% a quarter, and that's 8% at the end of the year, which arguably is a pretty solid number for most companies. And now what happens if they come to you like the third quarter and like, I just can't find a way to cut 2% of my budget?
Then we look at it again. We stay where we are for that quarter. And then we reevaluate. The other side of it is also profit margin. You got to kind of look at, okay, if you've cut everything that you can, how can you increase the income coming in? That's the other side of it. Because you can only go so far with the expense. But that's something that we look at too, because I look at income targeting. What do you need to have in that business to pay you? So what does your top line have to be? So we reverse engineer what that top figure needs to be.
So say that's that 30, I'm just going to go whatever that one was, say 30%.
30%, yep.
So if it's at 30% and someone, we'll use what did we say before? 60%. So say they get down to like 45%. They've cut it in half.
Yep.
And now they're looking at it and say, I've gone from 60 down to 45. The goal target, the tap is still 30%.
Right.
And they can't cut anymore, or they feel like they can't cut anymore.
Right.
Like I feel you have like, do you ever, like the 30% that they have, is that really something they should try to get to? Do you almost like,
it's a target, but I mean,
I don't want to say like let them off the hook, but do you, because I think some people, you press them a little bit more and say you could do some stuff, which might cause you have to think and kind of be more efficient in thinking.
Right.
Does that come into play too, where sometimes it's just a matter of pushing them and saying?
It does, because then you look at, okay, if you can only get it down to 45%, are you getting paid enough? Because sometimes they get to the point where they go, okay, that's good for right now. Okay, so then going forward, how can we increase it? And that's, like I said, we start looking at profit margins to see how they can increase on that
so
side.
They're accepting as like my end goal, the profit, and my owner's comp base, and I'm good with that. So therefore, I don't care if my expense, if my expenses went down to the 5%, it made 5% more, I wouldn't really care.
If they feel like they're making enough, between the profit and their taxes are covered and they're paying themselves what they want, then that's fine. But it's a guide. It's a guide. It's just, that's where you start. These numbers are figures from research that was done.
Yeah. So some people, like I said, if they,
I'm not going to throw them in jail if they don't get 30%.
No, but cause I just go, because I know, having read the book and knowing what Mike says in there, it's like if you, the 45, and again, I'm thinking like how I would react, and I think how most people would react is like you're going to have a base level that you could cut out right off, and you're like,
right.
I just cut out, let's just say 10% right off the top, because it was just like maybe 10% of 60%. So say 6% off the top. And you're like, that really wasn't that hard. It was a bunch of wasted stuff.
Yep.
And then it's like, okay, my next 5 or 10, I'm making some like modifications where I'm like, but I'll do it.
Right.
And then you get to the point where it's like, okay, this might mean I have to cut a staff member. I might have to completely rechange systems.
Yep.
Like one of the things we did was the CRMs we were using, which was great. It was costing us quite a bit of money each month, so we kind of just looked into different CRMs and kind of consolidated and tried to figure out user-wise, based on usage and stuff, how we could better allocate. And that something that probably at the end of the year will save us a few $1,000s a year just in that little. And it might be, that's I would say that's kind of more in that middle ground change. Like we didn't have to lay anybody off for it. We didn't have to do anything crazy, but we could change that where it wasn't like cutting the garbage bill. It was, it's like a different, like that's an easy thing that, and like, or a streaming service, like, we don't really need that.
Right.
So, are most people open to the idea of the cutting the expenses, or do you find that you really have to push on them?
I think they are. I think by the time usually they start, they're looking for they're just looking and say, hey, I need somebody to look at this, because you're not so, you're kind of biased by your own numbers if you're looking at it. Whereas if you got somebody else coming in looking at it and saying, oh, well, you know what, that kind of went up the last couple of months. What's going on with that? But yeah, it's the, the percentages that those are healthy percentages. And then I don't just let them get off the hook. I'm saying, okay, where else is there inefficiency in what you have for expenses?
And that's, And that's kind of where I go. Like if you push people and you push them out of their comfort zone, because like
Right.
I'm getting my thing. If I got down to 45 and I cut down 15, like I can't cut 15. Well, you probably can't. And I would have to like self-reflect and say, like, you probably can't at the current way I do business.
Yes.
But is there an alternative way to do business where all of
Yep.
a sudden, like, you unlock the secret door and like, oh, there's 10% cut right there that I didn't even see. And then,
Yep.
there's, all of a sudden now I've cut 13 of the 15 extra percent I need. And now it's
Yep.
like within reach.
Right.
I think that's most of it. And again, I go back to that shoveling story. Like if you were to sit down and mull that thought over for a couple hours with a pen and paper, you could probably come up with some great ideas.
Right.
And I think it's just that people don't take the time to reflect and think. And
It's easier not to do anything, or you go so far and then you get uncomfortable. It's in the uncomfortability that is where you find progress. So
yeah, and
move forward.
Do you find, like, when you work on your business, like, what's harder for you to do? Like, I'm not saying like make time to do, but physically do. Is it harder to work on your business or in your business for you?
I don't really find a distinction between. I find it more rewarding to work on it. I guess you'd say, not that I don't like working on my clients' work, but it just that is where my value is moving forward and developing my business, working on it, and getting clarity as to where I want to go, because that also helps me help my business owners, help them figure out where they want to go.
Yeah, and I think the on the business is more rewarding in the sense that that allows you to get to that next level,
Right.
because you're implementing a system that and again, another book idea I got, but it buys you back time. You put
Yes.
a system in, it buys you time.
Yeah.
I find that working on the business is way harder than working in the business for me. Meaning in the business, which is like meeting with clients,
Yeah.
calling people on the phone, doing that stuff. Like to me, I've been doing that for 12 years. You can kind of go through the motions in the sense that I understand everything. I'm thinking in the sense if a client's talking to me, I'm coming up with solutions and stuff to whatever they're asking or their scenario, but it's not a strain on my mind to come up with those answers because
Right.
I have them, and it's just like, okay, which one do I have to pull out for this conversation?
Right.
But when I'm sitting there trying to redo systems and stuff, my brain, like this morning, my brain was just done, and I sat probably 3 hours, like deep in thought, thinking all this stuff over and looking at charts. And this was stuff I did. I mean, I won't bore you with all the details, but just like actively looking at this stuff and forcing myself to think and
Yeah.
make connections. And like, if this happens and this, and you're
Yeah.
just that critical thinking mind. Well, I work 3 hours and I'm more exhausted than if I work 12 hours in the business. So
it is more exhausting.
Yeah.
I think because I have processes set up with working with clients, there's a specific way that we work with everybody because of efficiency. So we work with everybody at specific times. We have our meetings, and certain things need to be done by the time we have the meeting. So I think that part of it, because I've systemized it so much over the years, that's physically easier. Definitely the working on and the, sometimes you're spending time working on your business and you are exhausted by the end of the day. And that's it's more exhausting, but it's something that has to be done. And I think that's why people push it off sometimes, is because God knows you don't want to start something over, start looking at your systems one more time. It's like, how many times am I going to go through this? But it's something that you have to do to keep moving forward.
And I try to break up, like in a perfect week, and I've talked about this before, but the idea of like batching and stuff, but I try to put my on business in the beginning of the day and my in business on I try to do my podcast in the afternoon. I try to do my appointments in the afternoon. I try to do my call times typically in the afternoon. Every once in a while I have to have like a morning
Right.
here and there, but it would end up being like a late morning. I really try when I first come in to just sit and do something I need to do without getting into the whirlwind of, you're reaching out to people, they're reaching back, getting this message, this person's calling. And because then you, as we said at the start, like that's a very slippery slope to lose your day.
Right.
It's not that you didn't accomplish anything that day. You did from a client thing, but you did nothing on the business.
Yep.
And really you're almost level with where you were the day before.
Yeah.
And my goal every day I come in is like, I want to be increasing the on the business
Yep.
up a level every day. So, that's kind of my my aim, and I also try to front load my week. So it's like
Yep.
front load my day, front load my week, and my Friday I use as a flex day where I try not to schedule
Yep.
anything.
Yep.
And I work all day, but it's on stuff I want to do or
Right.
things I didn't get to that I may want that flexibility, not to feel like I gotta get this done because I have an appointment or I had this going on. It's like a free day where I can just like
Yeah.
I can roll in. It kind of is a nice segue into the weekend.
Yeah, I bookend my week, so the majority of client work and any work is going to be like Tuesday to Thursday.
Yep.
Friday's my makeup day. In the summer, it's just my pool's right outside my office window, so it starts calling to me about
Yeah.
2:00 in the afternoon, and I think, why am I sitting here? Because I'm not really motivated to do anything else. It's time to quit. So,
Yep.
but yeah, I bookend it, and then Monday. Actually, right now, what I'm doing is there's a group of ladies that I know that we do a co-working. It's a co-working Monday where we just get on for 2 hours on Zoom, quick. Say, hey, I'm here, and it's accountability.
Yeah,
so
love it.
I can knock out a couple of things in 2 hours that I know that they're going to pop back up and say, hey, did you get that done? So that's kind of what I do on Mondays right now too. But I like to leave the Mondays and Fridays open. For example, I got to go with my husband for an appointment tomorrow. So we schedule, try to schedule those kind of things on the days that I'm not out flat. It's taken me a while. It's taken me a while to figure out how to implement that kind of work style. It's just always a work in process. I tell you, it's I don't know how many Excel sheets I've got of different ways of redesigning my day, but my workouts first thing in the morning. I have to work out because that gives me the energy to get through the rest of the day.
So that's consistently that's
Oh
a
yeah,
habit.
for years and years. Yeah. So
Is that Monday through Sunday?
I actually, now I'm down to 5 days a week instead of 6. I did 6 days for a long time, but I'm getting to the point where it's not so good on me physically anymore because I run. So I run probably 5 days a week. Not much, 5K or something, 3-4 miles.
Yeah.
I weight train, and then my husband got me a row machine for Christmas, so I started getting back into that. But I've got all kinds of exercise equipment at the house. I mean, I got enough for a gym. I don't have. So when he told me he was going to get a rower, I'm like, man, I don't have any more
What
place
kind of
in this.
rower is it?
I can't remember the name of it.
Is it the Concept 2?
I don't remember. It's just it's a manual one, but it does sync up with my iPad. So it's and it's got videos and stuff. So yeah, I kind of been putting that in with everything. But yeah, I try to get that done first thing in the morning because I find days that I don't, and I've done this for years. So I find days that I don't work out. It's just I drag.
Yeah.
I really need that and coffee first thing in the morning.
So what time do you get up in the morning?
Probably now I'm getting up about 6 o'clock. I used to get up at 5 for years when my husband was working. But because I'd have to get on the treadmill and stuff before he did. So, but I get up about 6. I try to get, big thing now is sleep. I try to get into bed by 10 at night and get up at 6 in the morning.
Yeah.
And I try to get plenty of sleep because that helps restore, it keeps your stress down too.
Yeah.
So.
Well, I was gonna say that's the thing that I've been struggling with the last couple years. Is just like I was pre-kids. I was worked out a lot, very good diet, exercise, sleep, things like that, and then everything's been hit. So nothing's been consistent the last probably 3, 4, 5 years. But yeah, I mean a lot of it that's the importance, and obviously the sleep thing is something that I just struggle. I mean I work to get it, but it's
Yeah, well, with little kids,
Well, there's sleep and there's like good sleep. So
Yeah.
it's like even if you get down for 7-8 hours, it's like
Yep.
it's not 7-8.
Nope.
Like I don't find it's like a solid one. So but yeah, ideally, my goal is like if I can be in bed from the time I like lights out to the time I wake up, like try to have that time be about 7 hours.
Yep.
If it's more, great, but like have that be 7 hours, and
Yep.
then like knowing that's probably going to slide to like 6.5 by the time you
Oh,
actually
yeah.
fall asleep or get up
Yep.
in the night or something. So
I used to go 5 to 6 hours sleep. I did that for years, and it's taxing. And as you get older, you realize, man, I need more sleep. So
yeah.
and you physically, like your workouts and stuff aren't as efficient either. So
Well, yeah, I was gonna say that's another slippery slope. When you
Yep.
go down that, it doesn't help you come back. So you said you read a lot of books. Like what kind of what What books are you into? What books are you reading now?
Right now I'm reading a book called Leverage. I thought that was pretty. I can't remember who does it. There's Leverage, and I read a lot of personal development books and a lot of audiobooks. So being on the treadmill or running outside, I've listened to a lot of different audiobooks over the years. I started my Amazon account in 2000. Kind of scary when I looked to see how much digital media I've bought since then. But yeah, a lot of professional development.
Is it the
leadership.
Leverage Equation?
It's Fabienne, I think is her name. Fabienne. God, I can't think of her name. It's
That's all right.
anyway. That's the book I'm reading right now. Well, listening to audio right now. And of course, a lot of Mike's books. Jeffrey Shaw has a good book, The Self-Employed Life. I actually met him at a conference back in October, which I thought was pretty cool because I was sitting at lunch and he happened to be one of the speakers there. And I'm eating my lunch and I looked up and he's sitting directly across from me. And all I could say was, "Are you Jeffrey Shaw?" He says, "Yeah." I said, "I was just listening to your podcast when I was running this morning." It kind of freaked me out because here I was running in the morning and then he was across. But that's an excellent book on self-employed. Anybody that's self-employed, he has a lot of good stuff in there. But yeah, it's pretty mostly personal development and business related leadership. Marketing.
It must have been you right there that bought that.
What's
Like what we frequently bought together, that and the Profit First
oh
book.
yeah, are they together? Well, he actually is on. I think he's on Mike's. There's a manager accounting practice is one of the podcasts that Profit First puts out for Profit First professionals, and I think Jeffrey Shaw is actually a guest on it this week. He's really good. But yeah, there's just a lot of personal development books I've read over the years. Donald Miller is huge. If anybody needs, when you start out in accounting and stuff, you know nothing about sales and marketing. So he actually has what's called the business. I think it's Business Made Simple University, which has a lot of information about how to market your business, especially people starting out. And I think he has a Marketing Made Simple podcast. He has that too. But yeah, I listen to a lot of podcasts and do a lot of audiobooks.
Yeah, the audiobooks is my thing. Like I tried to, I made a habit last year of trying to read more. So I've been
I saw that. Yeah.
Yeah, which is why this book came out and a couple other ones. And like I go through and the idea, I mean, really at the end of the day is just to learn more. But I find like the more I read, it's like you always hear people say this is that it just expands your mind.
Right.
And you hear like a lot of, one of my favorite quotes, a guy I follow quite often. You know Ryan Holiday at all? Mm-mm. He's got some really good books. A lot of it's on like Stoic philosophy. And, one of the thing that he always kind of quotes is, and I think this was a quote for Harry Truman. He said, not all readers are leaders, but all leaders are readers. Meaning like if you read for whatever reason, that's been like a very common thing amongst a lot of like successful people. They just read a lot.
Yeah.
And I find that, so I kind of was like, okay, well, they're way smarter than I am at a lot of stuff, or maybe not, but they're more successful at whatever their field is. But let's try that. And so I read that the average CEO reads 60 books a year. So I was like, okay, that's gonna be my goal.
Oh, that's how you came up with that number.
So I'm gonna be like, I don't know, 60 books. Let me see if I can do it. And I got this 60. I don't know, 63, 4, something like that. And, a lot of them, there was audiobooks. There were probably 2/3 of them. But, a lot of the good ones, like some of them I read through and then I wanted to like highlight through. So like Profit First, I physically read. Yeah. But there was a couple other books like the Almanac by Naval Ravikant. I thought was great. One of my favorites. I don't know if you listened to that or read that one. Nope. So I listened to it and it was like so much wisdom in it that I was like, I bought it that week, came in, reread it within the week and wrote down a bunch of notes. And as you can kind of see, like in the book, like I just like...
That's good to see though. That if you got things marked up and the like things... Yeah. Oh yeah.
And some of them, like, it just depends on like ideas and stuff. Like sometimes it's just like a thought. Like with this one, I just opened up page 39, Parkinson's Law, that the demand for something expands to match its supply. And that's, Tim Ferriss talks a lot about that. A lot of people talk about Parkinson's Law with Pareto's principle. But, it kind of goes through and first, limits business. Yeah, the perfect size for your business. It will eventually It will happen naturally when you take the profit first. You will reverse engineer all the elements of the business. The right size will find you. So kind of, I just like that quote. And it's kind of like, okay, that, even though, will that turn into anything? Maybe, maybe not. But I think it's just figuring out. And actually, I'm surprised. I actually wrote less in this book than I thought I would. But I think, well, there's some more. I was going to say some of the ones like, just the new accounting formula and just kind of really going through. But I think it's, I mean, what do you get out of reading? Like, what's your reason for doing so?
A lot of it is so I can be a resource for my clients too, because they don't have time to read. So always. So I think that's helped me even, from a marketing standpoint. Sometimes I can, I know it's not related to accounting or finance or anything, but sometimes I can move them on to something that they're looking for. That and the technology, because I've had to do a lot of my own technology. Sometimes I can help them implement things within that works with like their accounting system. I mean, the accounting is nowhere near what it was when I started. I mean, now you've got QuickBooks Online and Xero. We're moving a lot of people to Xero now too. And because of the automation, that's something that's been taken out. So that puts us in a position to be more advisory. But if they have an issue with, is there an app that can be more efficient? If they need a connecting app that will work with it, that's something that we look at, or banking or whatever. Between that and reading a lot, it lets me be a resource for them, and something that they don't have to find themselves.
Yeah, and I mean, there's a therapeutic aspect to reading too. But I also find that one of the things I felt I didn't do a good job last year of doing is I read a lot of nonfiction books, and like a book like this is like my wheelhouse. Like I like that kind of stuff because it sounds like we're probably the same. So I'm forcing myself to read more fiction or more
autobiographies. Once in a while, I'll get into one of those.
Yeah.
Yep.
And it's just something to take my mind off. So like I have like 2 books right now I'm reading. So, 3 books I'm reading because I have one. I always have one on Audible going. So but I have Principle by Ray Dalio. I've been wanting to read for a while, and I know the concepts of it, but I want to read it and actually like turn it into like a resource to kind of with notes. And so that's one. And then the other one I got, I think it was a recommendation from Ryan Holiday, but I've seen it some other places. It's I think it's called Empire of the Summer Moon, and it's about the Comanche Indian tribe. And I'm only like, I've just started. I'm probably a few dozen pages in, but it's a book that I don't have to take any notes in. So I just read. Yeah. So it's like, those are the books.
Yeah, you need some relaxation reading once in a while too.
Yeah. So usually like weekends or evenings, I'll pop that book open or a book like that. And or I shouldn't say I do. This is what I've started to do just to have like kind of relaxation.
Yeah.
And then during the week, a few minutes here and there, I'll try to read some passages in this book. And, those are typically a slower burn if I'm taking notes.
Yeah.
Like that book, every page I probably read 3 times before I go to the next page. Just because like you read it, then you go back through and read it, and you go back through and highlight what you want.
Yep. So
it's like a 400 or 500 page book. So it's going to take me a while to read it, but I want to be thorough on it. And then if I read it in the future, I can almost skim it because I've taken the time to do the notes. So last thing I want to ask you before we get going, what band were you in? Because you dropped this nugget on me before we got going, and I was like, I can't let you off the hook right now.
So I was in a band called Upper US. It was with my husband, Francis Mercaldi, and Bill Babby, his cousin, and my brother-in-law, Pete Mercaldi, and Bob Jones. And Bob Jones is from Ross's Point. He was a family friend, and he worked at Pfizer. So back in the early 90s, I think they started to get together and play a few tunes. And then they asked me to be in. I had been in a band when I was 7. So music was something that I had done before. And my husband, when I met him, I didn't realize he was into music. So anyway, I was in the band with them, and we did 8 original songs. And one of the songs on there is Perry's Mills. And
wait, I think I've heard that.
Okay, so maybe you do because you got family that are from there. So Perry's Mills, my my husband wrote that. So these 8 songs, between us all, we wrote these 8 songs, and my husband wrote the song Perry's Mills. And how he came up with it is Perry's Mills is a hamlet outside of, it's between Champlain and Moores. And there's not much going on up there. It's pretty kind of farm country.
One way in, one way out.
Yeah.
Wait, what was it? It was called Upper U.S.?
Upper U.S. So
there's no way I can find this online.
no, but I will send you a link to your dad might even have access to that. But I can send you a link. So we did 8 original songs, and the one about Perry's Mills, that's the one they always want to hear. And my husband actually wrote it. He was about 14, and he had his guitar, and he would walk around the block, and he would sing and play his guitar. So that's how he came up with that.
The only listen to the Perry Mills Project. That's so funny. That's like a band.
So Calvin Castine used to play our CD a lot on Hometown Cable.
I don't remember the song. I remember there being a song called Perry's Mills when I was a kid.
Yep.
And that was Perry Mills Road is the only road I think in Perry's Mills.
Right.
Like it basically just cuts through.
We live on Dubois Road, so yeah, and you got Creek Road, so yeah.
Yeah, there's a few right at the bridge where it all connects.
Yeah.
So they were on my dad grew up on Perry's Mills.
Yep.
So we used to go visit my grandparents' house, and it was there. It's not there. I mean, home's there, but that one burnt down. But it was So that's
So we did those. We had I don't know if you know the band 8084. They just so they were big in the 80s, and Andre McCara had a recording studio over in Vermont, and we went over there and we recorded. Took us a month. We went after work and stuff, and took us a month to do the recording. And we recorded the 8 songs, and we put it on a CD. We played locally for quite a while in the 90s, and then I think it was 99 we did the CD, and people loved it. I mean, I still get people that come up to me once in a while, and they say, "Boy, I like that song you did." So yeah, I'll have to send you the link.
Oh, I'd love to see it. So,
the band. I mean, we got the pictures and all kinds of stuff. We did an interview on WLFE and all kinds of stuff.
It's so funny because I when you said that, I was like, I
do
remember that song. Yes. I mean, I couldn't tell you how it went, but I remember as a kid, like someone saying, "Oh, there's a song called Perry's Mills." I was like, "What?" So were you the singer?
Yeah. So I sang and played keyboard. Yeah. And I wrote two of the 8 songs. And then my husband, I can't remember how many. I think he did 4. One of the songs actually is a song that he wrote when we first started going out, and we played it for our wedding.
Oh, wow.
So we recorded it. So yeah, that was our actual wedding song.
So I mean, do you still play keys today?
So I haven't in a long time, and actually my husband is playing with some other musicians right now. I don't know if I think they're eventually going to probably play out. But he just started back into it, which is good.
What's he play?
He plays bass, but now he's in guitar. He plays rhythm guitar.
Okay.
So he played rhythm guitar. I played keyboard. My brother-in-law Pete played drums, and Bill Babby played lead, and Bob Jones played rhythm.
Oh, that's so cool.
Yeah.
Oh, so that was fun.
Oh yeah, it was a blast.
Was that pre-family? Like kids?
No, during family. So our kids were probably, 8, 9 years old at that point. But my daughter remembers telling stories. She'd go to school at Champlain Elementary, and people would say, "What did you do last weekend?" "Well, I ice skated." "Well, I did. I went for a ride with my parents." And she'd say, "Well, I went to band practice for 4 hours in a basement."
God.
But she ended up being a music industry major. So that was
rubbed off on it.
Yeah, and so both my kids do play instruments and stuff. It's a very musical family. We have karaoke at the house, and we have a big screen TV, and we used to do the karaoke and everything at the house. So it's
awesome.
So there's always somebody that sings, and so it's a lot of fun.
That's if people always said like, what could you be, and think like pro athlete, things like that. Like,
yeah.
I mean, I think pro golfer would be fun, but a musician's got to be a blast.
It's fun. I mean, I had a lot of fun doing it. I'm hoping to get into it a little bit more. Matter of fact, last week I just loaded Audacity. It's a recording program. So my husband,
right here. Actually, look at that. I got Loom and Audacity.
Oh, no
right
kidding.
There. Yeah.
Yeah, so I just loaded it just because I want to start recording some songs on my own, just to get something to do outside of
hobby.
Yeah. And my husband has a whole studio set up in his office, and that's what he does. He does recording, He does video recording. He's
Okay.
got a big green screen, and he's done recordings for a long time.
Actually, it's
Yep.
funny you say that. Like, this is like looking at some stuff here for that. I'll show you.
Oh,
Before you leave, I'll show you the future podcast room.
oh, nice.
This is not the actual one, but
Yep.
now that you're a sound person, you'll
Yeah.
you'll appreciate this. So,
Yep.
No, that's good. Well, Lori, last thing again. This will actually be the last thing. We'll wrap up for sake of time for you. But is there, kind of plans for the company for Profit First? Anything that you're looking to do? How can people maybe find you if you're taking on more clients?
So where they can get a hold of me, I'm on LinkedIn a lot. So just
Yes, you
search
are.
Lori Mercaldi. I'm on LinkedIn a lot, and my website is financialtally.com. So either one of those places, they can find out more about what I do.
This was good.
Podcast.
Like I said, I won't make you sing, but like I said, you rolled in. You're like, I was part of a band. I know all this recording
I
stuff.
just talked for 2 hours. Probably not a good idea to try singing.
I was gonna say keep those pipes safe there. But Lori, I appreciate you coming on and kind of diving into Profit First a bit. And again, if you haven't read the book, I think start there, read the book, and kind of get your mind around it. It is a bit of a paradigm shift, but I think it's makes a lot of sense. And again, some of the things I went into that are beyond the numbers, I thought were interesting just as like a small business owner that I thought was excellent read to part of this book. And the author, Mike Michalowicz, he's got a few other books that are all really good. And again, really practical advice. And, he kind of has a fun language to the way he writes and stuff. So he's kind of he sounds like a good time.
He is.
Like a jokester.
He is hysterical.
Yeah. So I think it's not a boring read.
No, it is not.
Yeah. So I think it's good. But Profit First, again, Lori Mercaldi, thank you so much for coming on. That was
You're welcome.
a lot of fun. And if you reach out again, financialtally.com, we'll put some stuff in the show notes. But yeah, that's episode 218 of the Galen Trombley Show. We're out. Thank you for listening to the Galen Trombley Show. Be sure to subscribe, review, and share the episode. You can follow me on all social platforms at Galen Trombley. Thanks for listening.